Let's ask that question to Michele Della Vigna, who is head of EMEA Natural Resources Research at Goldman Sachs. And a little birdie tells me that you're the one who put together this entire conference. So congratulations for that, Michele. Look, in terms of the underinvestment, we are talking about a dramatic scale of it. It's in the trillions. I've been reading the reports for years from the IEA and speaking to Dr. Fatih Birol about it. Why are we still in the process of unlocking that money rather than having unlocked it?
It's amazing. We are in the middle of an energy crisis. You would think we are unlocking everything in terms of energy investment from all sides, and instead we are still investing 25% less than what we were in 2014.
Let me get this right. We're investing 25% less than we were 8 years ago.
Yes.
And yet, despite the fact there's more demand now than there's ever been, we have a larger population on the planet, we have a bigger economy.
Exactly. 8 years ago, we were spending $2 trillion per annum in primary energy, so not only oil and gas, renewables, hydrogen, networks. Today, we're investing close to 1.5 trillion. We believe we need to spend 2.5 if we want affordable, secure energy on a path to net zero. So $1 trillion more per annum.
Yeah, and I was just going to say, I thought that original money, I find that a staggering statistic. I've never heard that number before, that it was so bad compared with 2014. But a large amount of that, those billions, is just being spent keeping the current infrastructure running, let alone about new capacity, isn't it?
Absolutely. We are in maintenance mode at a time when we should be pushing for growth. And we've got the technologies to do it. It's amazing how much clean tech innovation, that's one of the subjects of this conference. We've got 30-plus CEOs talking about clean tech innovation, and it's extraordinary between hydrogen, fusion, renewables, bioenergy, but the money is not being unlocked.
Why?
Because I think there is too much uncertainty around regulation. Carbon markets haven't really evolved. There's no good global structure for them, and as a result, the carbon-heavy global companies with businesses that need good margins to continue to run don't dare to spend the money. If you put together heavy transport, heavy industry and energy, the key industries that emit carbon, these companies on aggregate are reinvesting 40% less of their cash flow than the long-term history.
Talk about the need for regulation, and I think there's one point that you made to me off camera, which you're going to make again now, I presume, that is just staggering. We're still relying, in order to drive investment, we're still relying on the price of oil, gas and coal, where, i.e., they will set a price in the market which will mean that people will substitute, or they will have a low level, in which case people won't substitute. That is so, I don't know, it's like the Stone Age, let alone the oil age.
It's amazing, but all of the progress in clean tech technology economics that we've seen for the last 2-3 years have been driven by higher oil, gas and coal prices. That is what makes comparatively renewables and hydrogen more profitable. The exception, and I think this is where there could be a green shoot, is the Inflation Reduction Act in the US. The Inflation Reduction Act in the US is really a turning point on the economics of a lot of these technologies with really generous incentives.
The IRA, which the Europeans are looking at, and probably from a competition point of view, we know that they're very worried about it. Actually, you're saying that is a template for what should be done in Europe and should be done elsewhere.
I think it's a great template. It finally makes technologies like green hydrogen, local green battery production, carbon capture profitable in large scale. Repower EU started all of this, the US did it bigger, and now I think the ball is back into the European court to make sure we keep the clean tech leadership.
But the Europeans, let's be honest about it, they take their time and don't often get to the desired result. Are we going to just take too long, even though we are at the epicenter of the energy crisis?
I think time is running out, but we have some brilliant companies in Europe that have the IP, and as they develop in scale in the US and improve the technology, I think the benefit can be shared in Europe and in Asia as well.
Michele, the problem is, rather than having a European IRA, what we've got is European governments looking for more tax. They're looking at the old policies of taxing these companies in the first good year they've had in a decade.
I think it's important that the European tax system incentivizes more and more investment.
It's doing the opposite.
Rather than just taking windfall taxes.
But whether it's Italy, whether it's United Kingdom, they appear to be doing the opposite, or am I wrong?
It definitely looks this way. I think some of the recent tax moves don't really provide the right framework for profitable incremental investments.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.